Good afternoon, everyone, and welcome to Identifying Support and Resistance Using Price Highs and Lows. My name is Gail Mercer. I'm the founder of Traders Help Desk, and I'm going to be your presenter today. Now, before we get started, please take a moment to read over the Nadex risk disclaimer. Basically, anytime you're trading, even binary options, there is risk involved. You should never trade with money that you cannot afford to lose. Good morning, trader. How are you? Now, for those of you that do not know me, my name again is Gail Mercer. I'm the founder of Traders Help Desk. I've got more than 15 years of trading experience. I actually started out with a company that programmed indicators and simply fell in love with the price bar. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, and the New Trader's Guide to Trading Nadex Binary Options in Spreads. I have a new book coming out next week, which will be Trading Nadex Binary Options using candlestick patterns as well. They are all available on Amazon as well as my website. Now, before we get started into talking about highs and lows, you do need some basic understanding about candlesticks. Basically, what's a bullish candlestick versus a bearish candlestick? A bullish candlestick normally on a chart will either be represented by a green candle or a white candle. Anytime you see a bullish candle, that means that the open is at the bottom of the body, the close is at the top of the body, the very high of the wick is considered the high of the price bar, and the low is the bottom of the wick. So all candles usually have a body, upper wick, which is also called an upper shadow, and a lower wick, which is considered the lower shadow. Now, a bearish candlestick is presented the same way, but the information changes slightly. The open is at the top of the body, and the close is at the bottom of the body. Of course, the high and the low are the same. It's the upper shadow or the lower shadow. And basically, if you think about this logically, a bullish candlestick opens and then it proceeds up, and close will always be greater than the open. Whereas a bearish candlestick, the close will be less than the open, which is why the open is at the top and then it moves down. Now, a pivot high is typically consist of 3 bars. The middle bar will be the highest point, and then the bearish bar, you want it to close below the low of the middle bar. That is what makes it a true pivot high. Now, sometimes you will have this close and it does not close below of the low of that middle bar. In that case, it would be considered a ghost pivot. Now, there are a couple of other candlestick patterns that would represent a pivot high. Normally, this is called a spinning top, okay? If that is at the top in this spinning top, the high of this wick makes a high in the market, that would be considered a pivot high as well. Then you have the pin bar. Of course, the top of the pin bar, the top of the wick of that pin bar would need to be the highest point when compared to the other bars. And then you also have what's called an engulfing bar. And in this case, you can see that the bearish bar actually exceeds both the high and the low of the prior bullish bar. But you would need the bullish bar for this to be a pivot high. Now, a pivot low is the opposite. You'll have two bearish bars followed by a bullish bar. The bullish bar should close above the high of the middle bar. Again, sometimes it will close under the low, but that would be considered a ghost pivot low, not a true pivot low. Now, just like you had single bars that could create a pivot high, you also have single bars that could create a pivot low. Basically, you have the bullish spinning top. That would need to be the low, okay? So if this was, for example, preceded by a bullish bar that did not make a low, and this one did not make a low, then it would not matter. It's not a pivot low. The key in it is that it makes a low. Same thing with the pin bar. You have a long wick, okay? Any of the pin bars, whether you know it or not, it should be at least 2.5 times the body. So sometimes if you're seeing pin bars and you're saying, well, these just aren't working out, look at the wick. Is it really 2.5 times the body of the pin bar? Because that's very important on a pin bar. And then, of course, you have the engulfing bar. The key, again, is the engulfing bar must make a low in the market, okay? Now, what is resistance? Resistance forms when price cannot break through a prior high. Any prior high can act as an area that will stop price from going up. Now, if price does break through the resistance area, typical price action is that it will go back and test to make sure that the area of resistance that it just broke through will actually act as support to help price continue upwards. In other words, it's acting as a fuel to move price upwards. Support, on the other hand, is an area that can support a price to move up. Now, any prior low can be an area that will support price. When price breaks through a level of support, typical price behavior will be for it to go back and test that area of support to make sure it's now acting as resistance. And again, it provides the fuel to push price down. Now, this is a chart, and it really just kind of highlights the pivot highs and lows. And you can see, starting over here on the left-hand side, you have a bearish bar, and then you have this bullish bar right beside of it. Now, I know that the bullish bar did not take out the low because there's a line of dots that are coming off of this low, beginning with the bearish bar. This would be considered the ghost pivot low, okay? Why? Because the bullish bar did not close above the high of the bearish bar. Does everybody understand that? So it should have closed above the high of this bar. It did not. That makes it a ghost pivot low, okay? And then price moves up, and then you have the pivot high form here, okay? When this pivot high forms, it is still a ghost pivot. Why? Because it does not close below the low of this bar. Then we have a pin bar right here. Now this pin bar is an actual pivot low, okay? This was a ghost. This was a ghost, but this one is an actual pivot low. It is also confirmed with the next bar, which closes above the high of the pivot low. Does everybody see that? And what happens? It pushes price up. Now, this is the key. When you're looking at this and this pivot low forms, then you know that this high should be exceeded, okay? That's what a pivot low will do in an uptrend. We then have another ghost pivot, and then we have another pivot low. This pivot low right here is a pivot low, and the next bar closes above it, okay? Then we form the pin bar. The pin bar is a pivot high in and of itself. If you want confirmation, you look at the next bar. It closes below the low of the pivot high. Now, when it goes back, if you were in a downtrend, you would expect it to test this pivot low. But we are in an uptrend. How do you know you're in an uptrend? Because you're making higher highs. This was a ghost pivot high in a new pivot high. Each one, if you connected them, were higher than the previous ones, okay? So you're expecting this one to make a higher low, in which case it does. You have a doji here, which a doji in this case is only showing you that there is indecision in the market. Then you have a bullish pin bar followed by another bullish bar. It takes out the high, forms another pivot high. In this case, this is a ghost pivot, okay? And the reason that this is a ghost pivot, it does not close at the bottom, okay? And the next bar simply forms a doji. Again, it's just telling you that you have indecision in the market. As you can see, it comes down and it makes a pivot low here. This is a true pivot low because it closes above the high of the previous bar. Again, if you're connecting these, you're still making higher highs, okay? Let me erase those drawings. Now, we have the pivot high here. After a pivot high, you're expecting a pivot low. Pivot low comes in here. It is confirmed on the next bar. You are expecting this high to be exceeded. But the market actually goes through a period of what we call consolidation, also referred to as congestion. The key in this congestion area is every time it comes back and it makes a pivot low, okay, you have a pivot low formation telling you that this market is going up. Each one of them, they were not ghost pivots, they were actually pivot lows, true pivot lows. Each one indicated that the market was going to go up. Do you see that? Then you have your pivot high here. But what's special about this pivot high? It is still a ghost pivot, okay? Then they come down and they make a new low here. When they make a new low here, and this is a true pivot low, you are expecting them to test this high. But what happens? You get a pivot low that is actually lower than this high. So if you connected them, it would show that this is lower, but you were still not making lower lows. Does everybody understand that? So you come down, you make a new low. This is a ghost pivot. It means the same, but it's not very strong. Then they come back and they make a new low and they take out the prior low. It is at this point right here that if you were trading off the pivot lows because you were in an uptrend, at this point right here, you know I need to be trading the pivot highs because I am now in a downtrend. Does everybody understand that? Any questions on that? And again, it is this point right here that you have turned into a downtrend. Okay? Now, could you trade pivot highs and pivot lows? You can. There's a couple of different ways that you can actually do it based on whether you're a counter trend trader or whether you're a trend trader. If you are a counter trend trader, okay, then you want to see a substantial upward move. Then you want to wait for the bearish bar to develop. And you can either enter an at the money or an out of the money 2-hour binary option. Okay, if you're a long counter trend trader, you look for a substantial move down, you wait for a bullish bar to develop, and then you could enter an at the money or an out of the money 2-hour binary option. How do you tell if it's a ghost pivot? It's the close of the third bar. If the close of the third bar does not close above the high of the middle bar, it does not form a true pivot low. If it does not close below the low of the middle bar, it does not form a true pivot high. Now, let's say that you don't want to counter trend trade, because counter trend trade, either you like it or you don't, and you have to be able to take a loss, because on counter trend trades you will more than likely lose more than what you win. It's the risk to reward that works in your favor on counter trend trades. Okay, but if you're trend trading, then all you have to do is make sure you're making higher highs and higher lows. You wait for a retracement that forms a pivot low, and then you enter either at the money or an out of the money 2-hour binary after a bullish bar forms. Okay? But let's say that we were doing a short trend trade. In that case, you must be making lower highs and lower lows. You have to wait for the retracement. And when that forms a pivot high, then you could enter an at the money or an out of the money using a 2-hour binary. But that bearish form bar has to form. Okay? So let's look at some trades using that methodology. Yes, this is being recorded. Okay, this is your first one right over here. Okay, now remember, we had to have a substantial up move. By any definition, this is a substantial up move. Okay, so then you form your bearish bar. Okay, you use a 2-hour binary that is either close to the close or one strike out. This is on the euro dollar. So, I mean, every 4 pips, there is a 2-hour binary strike available. So this vertical bar here represents the expiration value. So in this case, if this was at the money, then it would have expired in the money. Do y'all see that? Because you entered here and the close of the bar is here. Okay? It's a 15-minute chart. Now, was this a true pivot? No. That was a ghost pivot. Okay? But remember, our trading plan did not specify whether it was a ghost or a true pivot. Okay? All it said was it was a pivot high. And you had to have a bearish bar. This is your bearish bar. So this one actually did make money. Then, as of right here, we're making lower lows. We're making lower highs. So what are we supposed to do? We're supposed to trend trade. Again, if you entered an at the money here, at the close of this bar, the close on the 2-hour expiration is here. So this one also made money. This one made money. This one made money. We then have a substantial move down, because look at this bar. I mean, this is at least a 20-pip bar, which for a 15-minute chart, that's a substantial down move. You need a bullish bar. We have the bullish bar right here. You enter long at the close, and this one expires out of the money. Okay? So this one you lost money on. Now we are making higher lows and we are making higher highs. We're expecting the market to go up. I'm sorry. So we enter an at the money here, and the expiration value is here. So this one would expire in the money, provided there was an at the money strike here. With it being 4-pip strike width, there's usually always a binary that you can get that is close to that closing price. We then form a doji, which again, that is a candlestick pattern that indicates, in this example, this is a doji that closes right up at the top and has made a low. This low is higher than this low, so we're still in the uptrend at this point. You go in at the close and the expiration value is here. It is greater than this green line, so this one would also expire in the money. Then we have an engulfing bar, and this is an engulfing bullish bar. It exceeded both the high and the low of the previous bar. And again, this indicates that the market is going to go up. Do at the money right at the close of that bar. And again, the expiration value is the close of this bar. So this one, again, it would have made money. We then go from 1550 up to 1580. A substantial up move there. Well, let me back up. I have one that I didn't highlight here. Again, this is a bullish engulfing bar. You can see that. Again, you do a 2-hour binary at the close, and it expires in the money because the expiration value was here. Now, in this case, you do have from 1550 up to 1580. That's a 30-pip move. Consider substantial move. You form a doji that is closing at the bottom here. You also failed to take out this high, okay? And that makes a difference, because anytime, and I want to just kind of highlight this for you, anytime you enter the market, and let's say here you entered, what is your expectation, okay? Your expectation is this high is going to be exceeded. When you enter off of this one, what is your expectation? High is going to be exceeded. What is your expectation when you enter here? The high is going to be exceeded. What is your expectation when you enter here? They're going to exceed this high, okay? Exceed the high, not equal, but exceed the high, okay? In this case, you now say, hey, something's wrong. We've had a substantial move. They did not exceed the high. Where's the market likely to go? Okay? So you go short here, and it would be at the close of this bar, and the expiration value is down here. Okay? So this one, again, expires in the money. I don't make recommendations, trader. Okay? I'm here to educate people. Personally, I use a 15 and a 2 hour. But, I mean, I trade this same thing using a 5-minute binary. It doesn't matter what time frame that you're trading. What matters is that you can apply it consistently. Okay? And in this case, that's what you're trying to do, is apply it consistently. And this one is not even taking profits early. It's just saying, okay, you enter, and what is the expiration value? Okay? Now, you can combine the pivot highs and pivot lows with other strategies. Okay? In the new book I have out, I show you how to do it with the MACD, how to do it with moving averages. You know, what would I recommend that you learn to begin with? Price bars. And there's a lot of books written on candlesticks. I think the one reason that I'm so popular on candlesticks, there's only certain ones to me that are important. I can take everything on this chart and make it into a candlestick formation. Okay? But there's only certain ones that really make a difference for me. Do you go one strike out with a 2-hour expiration? Generally, yes, that's what I do. Especially on a counter trend trade. You know, my risk might be around $30 on my expiration. Okay. It's trading Nadex binary options with candlesticks. It should be available next week on Amazon.